I started to see a lot of the benefits they gave us, the things I was not good at. I had to worry about things like operations, marketing in our local areas, and building those relationships. The franchise brought it all to me.
Welcome to The Alternative Investor, the definitive show for investors seeking private alternative investments. Here's your host, Matt Johns.
Today I had an exciting conversation with Jackson Roberts, the founder of Beta Capital Group, a long-term investment holding company based on the Berkshire Hathaway model. Now, we focused our discussion today on their current portfolio focus, franchises. Now, Jackson and his team are just getting started with Beta Capital. In fact, the reason why I stress today is because this episode is just the first in a series that will follow them on their journey. So here we discuss their decision to pursue franchises and the lessons they've learned after their first year. Jackson's had a diverse career himself, including experience in accounting, real estate, and investment banking. He even owned a jewelry company and served as a police dispatcher at one point. In addition to his role with Beta, he's even currently pursuing a Juris Doctorate in law school. I've had the pleasure of knowing Jackson for the past couple of years since he got started. And I'm so excited to share his journey both now and in years to come with you through this series. Welcome to my conversation with Jackson Roberts from Beta Capital Group. So how's law school treating you these days?
It's good. A lot of people ask me why I ended up going there, even though I want business and investing is my biggest thing. And I tell people there's two reasons. One is that it's kind of near and dear to me. One, because I find it interesting and I do love it. And I come from a range of family attorneys. And so seeing how they were all able to do it, it made me want to do it more. And I just love learning about it. And honestly, it does help me with a lot of what I do, especially with the franchises. A lot of it deals with contracts, legal things, liability. And then with investors, dealing with security laws can get complicated. So that's kind of one of the reasons. But the second thing is it's more a passion project too, is that when I was younger, probably elementary and middle school, a lot of teachers realistically didn't think I would either make it through high school or I wouldn't make it through college. And hearing that type of thing and coming from a family of attorneys was that one kind of hurt to hear, if I'm honest with you. And to me, it was just like, maybe my pride getting here is like, I want to get to that level. That to me is something that I want to show people that I could do it. I want to prove it to myself, most of all, to show that I am capable of pushing myself outside of my comfort zone. And even when I struggle with things, I can continue to learn. The funniest part about it is I grew up with dyslexia, had a hard time reading. And if you can't tell by my background, it's one of my favorite activities now. So law school is going great and I have no regrets going. It's interesting balancing it out with everything, but I'm luckily in a good program where they really help and support you.
Yeah, that's awesome. And that combined with your financial acumen, with your accounting background and all that too, you're kind of becoming a powerhouse as far as the back end of all these kind of things go.
Oh, absolutely. And it's beyond helpful. Combining it with my tax, I did some tax accounting before I went and learning how to do that type of thing. And then learn how to read financial reports and do bookkeeping. I learned back in college. Adding that on is just the best thing I could have added. And it's really just helped me be better prepared for things.
You've got an awesome venture right now with Beta Capital. I'm really, really impressed by that as well. And I think you touch on a lot of people's curiosities because as we're entering the business, the back end stuff's all the really difficult stuff to put together. That we always see the front end and we think how exciting that business sounds, but the back end stuff is what's tedious and difficult. And franchises, that's where you're entirely focused, is on that process and on the all those back end processes really. And you're taking on a structure that groups these franchises together in a model that allows you to leverage knowledge in one area and then scale it over multiple areas. So, but when we first met a couple of years ago, that wasn't the vision. So
No.
Walk us through a little bit about where that started and how you got there today.
So yeah, when I started this journey out with just wanting to buy an existing business, I had read a great book called Buy Then Build. And I had never even thought about buying a business. I did not even realize that was possible. And really I started deep diving into it and researching it and kind of figured out the basics. But I kind of started off as a generalist. I wasn't looking for anything particular. My background being accounting, finance, and kind of things like that, there wasn't much in a very generalist. Like I had worked for accounting firms. I wasn't in I don't know, a roofing company, for example.
Hmm.
I didn't really have any industry experience. So I kind of looked up companies that were doing something similar. Um, I think one's called tiny.com. From what I've seen, they buy up small businesses, but they're very general. They don't have a specific niche. So I started with that mindset. But I ended up going through probably over hundreds of deals, kind of developing a process, understanding what I'm looking for, what to spot, and how to spot red flags quicker, and really building up a system of finding a good business for sale. And it wasn't until we found the first franchise we bought, the current one we own, that I really realized some of the benefits of franchises. And so I ended up in the franchises honestly, by accident. It was just because a broker I had previous contact with had sent me over a new listing he had and just mentioned the franchise. And I was thinking the revenue looks good, profits are looking good. It seems to have made it through several hard times, including the 2008 recession, 2020 COVID, but honestly, it flourished in 2020.
Hmm.
And so, really, with the franchises, we ended up with it by accident. But after getting into it, talking to the franchisor and franchisees, I started to see a lot of the benefits with the franchise because they gave us the things I was not good at, like a brand that was already existent. Of course, you can buy any business and it has some type of brand, but you have to keep developing that brand constantly and always be marketing. But coming to this franchise, they had a whole branding plan, marketing plan. They handled all those type of things without me having to worry too much about it. I had to worry about the things that needed to be worried about, like either the operations, making sure everything's running smoothly, and that we are marketing in our local areas too, and building those relationships. So, and the other thing is, like, this is a lab testing franchise. We do retail lab testing. A lot of these contracts, a lot of things we order, a lot of the small details you never think about. I would have never realized those small things, but the franchise brought it all to me. And so, kind of getting back to your original question, I ended up with the franchise by accident, just going through deal after deal, and then just a broker sending me it and loving the model, loving the potential growth and everything to it.
I want to dive a little bit deeper though into why franchises though, because you talked about all this, this incredible array of businesses that you were looking at. What gave you the impetus to say that I'm willing to take these risks because these rewards are much more likely?
First is there's a few options for an exit strategy. I have 4 locations, but if I really needed to, I could sell off each one individually to other franchisees or other buyers, giving me kind of a multiple option for a fire sale is the best way to put it. So it
Hmm.
kind of lowered my risk in that department. And then just looking at that, there was a support system behind me. Understand that this was really our first big business venture, and the amount of debt we were taking on to buy it is, well, nerve wracking. For anyone who's ever signed an SBA loan, signing those personal guarantees, it's it's nerve wracking to say the least. And so to have that support, to have the people in the corporate background just kind of answering questions, telling you what other franchisees are doing, and giving you guidance, y-
Yes.
that to me was just so worth it. And the other big thing that I realized in looking over something we call the FDD, but we can talk about that later, was seeing
Mhm.
all the franchisees that owned the location.
It's the franchise disclosure document, correct?
Yes, franchise disclosure documents. And in it, it usually lists all the different owners in the franchise system. And when I saw that as an opportunity to build more of a community, meeting more people,
Mm.
like minded people. Because when you buy into a franchise, you are buying into a community as well, because you're not the only franchisees. There could be hundreds, if not thousands. Dunkin' Donuts alone has over 8,000 locations, give or take. And that means there are hundreds, if not thousands, of franchisees, meaning you can reach out to them, ask them questions. Hey, we're struggling here. What are you doing to improve it? There was a lot of opportunity to get really good help, get wise advice, and figure out the best ways to grow and to really build off of each other, not only helping the brand build out better, but also to help your business become even better. So those are the things that really got me into the franchise and why I started to fall in love with it once I started reading into and doing the due diligence on it.
Did franchise fees or anything like that come up in your process where you were kind of weighing whether you were going to, not just franchise fees, but having full ownership over everything? You don't have
Yes.
control over your marketing. You don't have control over certain things. Were those a net positive or net negative for you?
I think to me, it was somewhat of a net positive, because having that extra marketing does really help, because I can't do everything. And like, how do I put this? They handle a good amount of the marketing. Obviously, I still have to, in my FTD, I'm required to pay something to local marketing. I have to work with a pre-approved vendor to do some local marketing, but they help a lot with the branding, national recognition. So when people move to the city, they already know our brand. And so we have two things: royalty fees and marketing fees. Royalty fees is basically, you can think of it as like paying what you owe to the landlord. You're renting their name. So you're paying your monthly rent. And they can, I can't remember, I'm trying to think they're changing a few things. So things off the top of my head, I'm trying to remember. I think right now our royalty fee is about 7% off of gross sales, and our marketing fee, monthly fee, is 1 to 2%. And so, yes, those eats into them, and they can be looked at as a negative, but I take that as more as a business expense that I am paying for a brand recognition. I am paying for a business plan handed to me. I'm basically paying for a business in a box where I have guidance. I know what to do. And if I follow the steps, I can really take off and do well and scale quicker, because since they have all the minute details you don't think about at all, it makes it easier to open up more and more locations. Once you get past that first location, maybe the second one, it gets a lot easier because you know the processes. They have everything laid out. And so, yes, I am losing control over some things. Like, I can't just randomly decide I'm going to add this or I'm going to do this. I lose a lot of control, but also I'm really building out something that can still grow and produce a lot more wealth than if I went out on my own. And I can scale a lot quicker than I could if I went out on my own again. So you really have to weigh the pros and cons. If you are the type of person who doesn't like to be handcuffed or told what to do at all, franchising might not be the best way for you. But if you're like someone who wants to start a business but doesn't really know how and is looking for guidance, franchises might be the best way, especially if you know how to follow a plan and directions and take on advice and opinions from other people. And so there are those negative things. I'm losing control, but to me, I'm gaining so much more over those few things I'm losing control over. But obviously, I will say this: there can be negatives, with where if the brand does something that affects them, it can affect you too. I think the best example is Papa John's. Back with their, can't remember, as the founder or CEO said a few things that just were not appropriate.
Made some headlines. Yep.
Yeah. And it ended up affecting the whole franchise, all the franchisees. So you do run into those risks, but it's not, things like that can happen to any business, or something could happen.
Sure.
But to me, looking at that, I find the headaches and the risk of having those things and lowering my risk than going out on my own much worth it, especially with the fees and everything.
You mentioned it's a business in a box,
Mhm.
but that is a business in a box if you can get the financing to cover
Yeah.
all the needs of that business in a box, right? Now, that risk you mentioned with the SBA loan,
Mhm.
there are franchises that fail all the time. This is not an uncommon thing. you really have to do diligence on your end too, leading into not only what franchise you're selecting, but if you're selecting one that's already up and running and you're buying from an existing owner, you have to make sure that you're looking into those kind of things. If you're starting your own franchise, there are certain things you have to look into there, and make sure you're prepared for those kind of things. So what was going through your head as you're thinking through those two things in particular?
This is where I'm going to kind of humble myself a little bit and be a little bit transparent with this first franchise. And it has been great. I won't say anything bad about the franchisor. They've been very helpful. They are a great company. But there were mistakes that me and my team, we made buying this first franchise. There was a lot of things,
Of course.
we didn't realize we should have checked. We should have, one being an example, is talk to more franchisees, people who have already invested in the business. What has your been experience with your franchisor? How has the operations been? How have you felt the business has been growing? Have they been adapting to new markets? One thing like that. And then, like you said, taking on the risk of like how many open and close. We looked at, for example, we did take measurements of like, I think they always kind of look at the past 3 years on, it's the average of what the franchise disclosure document shows.
Mm-hmm.
And we kind of looked at like how many are opening, how many are closing. And in retrospect, when you're looking at those type of things, you really have to look at the franchise as a whole. Like Dunkin' Donuts, I just looked at them the other day. They have about 8,000 units, right? But they open up a couple hundred a year, but they also close maybe 100 or so a year.
Mm-hmm.
And you have to factor in, it's like, do they have that many? And it's probably likely that maybe a few are going to close a year. You have to kind of weigh out and look at the franchise as a whole when looking at something like that. Because if they only have 100 units and they shut down 20, they shut down 20% of their locations. So we made a lot of mistakes and things like that. Something I did not even think about, and my franchise is luckily not one of these, but in all the franchise disclosure documents, in the very bottom, I can't remember, I think it's item 23. Either way, it kind of, franchises have to have audited financials, meaning they have to show like how is the franchisor doing as a whole. And something you want to always look at is that how is the franchise making most of its money? Are they making most of their money off the sale? As in, when you're investing in a franchise, you pay something called a franchise fee, which pays for your starting, your training, and all that. And they can range from 10 to upwards of hundreds of thousands of dollars.
Mm-hmm.
But also franchises make money off that royalty fees, where you're paying the monthly gross sales, right? You need to look at both of those and see, hey, are they making more of their money off selling units than they are off the existing locations? Because if they're making more money off the sale of their existing, or selling off new locations, that shows they're not investing into new franchise. They're not investing into their current franchisees, and the franchisees might be struggling along. But if they're making more off the royalties, that's usually a better sign to show that the franchisees, the people investing into the company, are doing well, they're succeeding. Now take that, is with everything I'm going to say, you have to take it with a little bit with a grain of salt. Because if it's a new franchisor and they have maybe only 10 to 20 units and they're in the growth phase where they're trying to sell off more locations, they are going to make more off the sale of the franchise than they have royalties. So you have to see how long have they been around and things like that. Like really see how are they making their money. You want to make sure most of their money, if they're existing in an established brand, you want to kind of make sure they're making most of their money off of the existing franchisees, because that shows they're stable. Franchisees are staying, they're growing, and they're sustaining themselves.
Yeah, they're making money.
Yeah.
Everybody's winning, right?
Yeah. If they're not making money off the franchisees, that probably means the franchisees aren't really making money either.
Right.
And that's just a few due diligence. And I kind of want to hammer this out. Like, there's a lot of things that go into doing. I've learned, because again, some of these things I am saying, I did not do with the first franchisor. And we got lucky with ours. We got a good one. I will say that. But it's still something we got lucky with that we should have done more due diligence on the franchisor. And so I just want to hint a little bit of what the franchise disclosure document is, or we really call it the FDD for short. But it basically discloses everything about this franchise company. So what they have to do is, if I recall the process, they have to file any state they're selling their franchise in, like the concept, they have to file with the state. But I believe it's the Federal Trade Commission,
Hmm.
and they have to disclose a lot of things, like the experience of the management team. Who's the CEO? What's his experience? The COO? What's his experience? And so on and so forth. And then they have to disclose: have they ever filed for bankruptcy at all? If
Hmm.
they file, did this company fail at one point and was bought out? That's going to be disclosed. Item 3, I believe it is. It's the litigation. Why
Hmm.
have they been
That's a big
sued?
one.
Yes, you need to see. And again, you have to kind of look at the whole franchisor, because if they've been around since, I don't know, 1980, and they got thousands upon thousands, like McDonald's, for example, there's no denying there's going to be some litigation there.
Mhm.
And you have to really see what's been the common denominator behind all of them. Is there something the franchisor is doing, or is it franchisees who just didn't do enough research and didn't realize what they were investing into, which is
Yes.
probably the biggest complaint and issues people run into. Is people who invest into franchisees are thinking they want to own a business, and that's great. But running a franchise isn't like running your own business. You're still kind of restricted. And some people really don't understand how restricted they are in a lot of areas, which is fine, depending on what you want. But that can be a common issue. But you want to see, like, is it the franchisor who's done something that's caused them to sue? Who won? What did they settle in? And you want to really look at how long the franchisor's been around, because if they've been around 5 years and they've been sued maybe 10 times,
Hmm.
you're going to want to be maybe back away. And so this, what I'm getting to is like this franchise disclosure document is going to lay out everything. Uh, like I mentioned earlier, it's going to tell you their financials, how the franchisor is doing, and then item 19. And this, I will hint at and kind of emphasize on. You want to read this very carefully, item 19, because being in accounting and finance, people can make the numbers look however they want. It's very easy. And so you need to read, because what item 19 is, it tells you the averages, how the average unit is doing. So the average unit might um, let's just say Dunkin' Donuts. I'm sorry I keep using them, but I literally was just looking at their stuff yesterday.
No,
So,
keep rolling. You're doing great.
uh, and I love Dunkin', but I think theirs was like averaging maybe a million per unit, give or take. And don't quote me on that, but what that tells you, like, the average unit is doing a million, but you need to see how they calculated that,
Hmm.
because some of them will say, like, only take a batch of their franchisees and say, we're only going to look at franchisees that have been open for 5+ years. And I've seen some that are say, okay, we're going to look at franchises that have been open since 2023, 2022, 20, and so on. And they'll see, like, here's the average these people are doing. And so you need to read in and see how they're calculating, because I've seen and heard from others that they'll kind of misconstrued on the calculations, make it look prettier than it actually is.
One thing I've noticed too is maybe you can correct me on this, but I've seen there sometimes they'll use gross and sometimes they'll use net income. So
Yes.
that's something that's really important, especially when you're talking about large franchise fees or
Mhm.
any other high, I guess, high cost businesses.
Yes. And you want to make sure, like, what are they saying gross sales? Are they saying that after the
That's right.
fees, the royalties? And uh, yeah. And I'll harp out one more thing you should kind of look at. And it really depends. Sometimes this can honestly be a benefit, is like what all you're paying for. I can't remember which one, where it is in the FDD, but in some restaurants, they require you to pay them for the food and ingredients.
Hmm.
And that can be bad at times. You really have to talk to other franchisees, but sometimes that is honestly the best benefit. I got to talk to another franchise about their brand, and you have to buy from them, but looking at their profit margins and how well they do, it makes sense. But their logistics are perfectly set up in a way where you never are short on anything. You're always making sure you're refilled. And so while it may be a little bit more expensive going through them, that safety net of making sure you always have what you need. They have the logistics. They have their vendors strategically located across the U.S. so that you have your resources nearby so you can restock on any supplies or food. It's
Mm-hmm.
great. So you kind of want to look at it as a double-edged sword. Sometimes that can be beneficial. But that's just, again, I could go on and on about
Yeah, yeah,
every
yeah.
due diligence. There's so much to the franchisor, which just adds when buying a business, you have to do due diligence on that business itself. But then doing a franchise, you got to do a whole nother level of due diligence on the franchisor itself.
Mm-hmm.
And you want to make sure that you really align with them and that their model fits you too.
As far as your team, you're not doing just this is not just a one-off franchise for you and your family. You're putting together a business that's compiling a bunch of
Mm-hmm.
other franchise groups together. I don't know what you call them, franchise, multi-unit,
Yeah, multi-unit franchises.
multi-territory,
You
or
just
yeah. So because you're doing that, you put together a team, and it sounds like you got a pretty stellar team that you've compiled for this. So tell me about who's on this team and why are they a member of your team?
So we have 3 people on our team right now: Will, Chase, Tim Hendricks, and Dante. Um, so each of them brings a unique experience. Tim, he is an operation expert. He knows more about operations than I do, in all honesty. He works with another company that buys and sells small businesses, and they have an interesting model. They sell it back to the operator they put into the business, but he helps them find operators for the company and helps making sure they find the right person for the right fit. So he's just there because he knows how to find an operator and he knows how to operate a business well. Even though we have those businesses and plans in hand, having something like that is
Oh,
just
absolutely.
irreplaceable. Will has a lot of experience when it comes to merger acquisitions and a lot of helping with the financing, getting credit financing, terms, getting the best financing, and really knowing how to negotiate better terms and deals. And since a lot of what we do is dealing with leases and real estate, whether we're buying it or leasing whole things, he has 23, if I recall, like 20 years of experience in the real estate field, whether it be investing or otherwise. He's been very helpful in that general sense. Dante, he has a range of experience with helping with sitting on advisory boards for funds, and it specializes in data as a data analyst, helping a lot with the AI stuff and helping us kind of implement AI more to help with the FDDs, doing market research, and really doing deep dives into just a lot of the data stuff. I'll be honest with you, I fully can't explain it. I'm not a data guy, but he knows how to, when we need to look at the market and see like, what can we do to improve here? Or is this actually a good market for this? He knows how to find the data. He knows what to look for and get the information I need or the team needs.
Well, it sounds like that's why Dante's on the team, huh?
Yeah,
Yeah.
like each of them. But there's one thing that kind of is the biggest reason, bigger than the skill sets they bring, in all honesty, of
Mhm.
why they're on the team, is that each of us has a important mission we want to fulfill in life. A lot of people, how do I put this? A lot of people don't think about, they think about what they want to do as a career, or they don't think too far ahead. Like any financial advisor will tell you, people only think in the now. But each person on our team has something that is close to their heart that they want to fulfill. And what I mean by it's like they have a mission statement in their heart that they want to work towards. Whether it be Will is a former veteran, and he has a heart for wanting to help more veterans and invest into veteran businesses or providing housing for veterans. Dante wants to help underprivileged and minority groups over time and really invest into those communities. And Tim, same with him. He wants to just invest more into his local communities and just wants to leave a legacy. Even me, I have mission statements close to me that to us, we worked well together because we each have something close to our hearts. And
Mhm.
with us investing into franchises, may not sound like it's relevant to any of those missions, but their investments, they provide us cash flow. They provide us more opportunities to grow, fulfill, and let us focus over time what we want to be more invested in. Like whether it be Will wanting to invest more into veterans, having these investments that he can use to invest into that, or getting the platforms he needs. So really, we're a great team because each of us help each other with this project, but we also encourage to help each other with our life mission statements. And I think that's why they're on the team most of all, is that we help encourage each other to make sure that even though we're focused on this, that we never forget our life's mission statement, and to help those that we really want to help down the road and however we can, whether it be with money or the resources we have. So that's I think, the tied for the biggest reason why they're on this team besides their skill sets.
Having alignment of mission is always a huge piece of that too. And how do you think that benefits investors by having this team and having this alignment of mission?
I think it benefits them that they understand we're not just in this for money. I want it, and that sounds like a cliche, but obviously we focus on making good returns and investments, but it also has helped us with just the business models as a whole. Because it helps us make more stable businesses. Since we have bought our franchise locations, so the number one issue we've seen with the other franchises is that they have such a high turnover rate of employees. But since we've owned ours, we have only lost one employee in the entire time we've owned it. And that was only because we had to let them go since they weren't best for the environment, for the work environment. But ever since that, we've had lower turnover rate, in us having that mission aligned and knowing that we put people ahead of a lot of things. We've been able to stabilize the company and really grow it a lot quicker because we've had less turnover. And so having our mission statement reminds us that we serve the investors and our employees before we serve ourselves. It shows that we aren't putting ourselves first. We're never going to think of ourselves first. We're going to put the investors first and put the businesses ahead of ourselves. And when we own these businesses, we're employing people. Their livelihood is depending on us, making sure that they continue to get paid, they're making living wages, and that they're continuing to see growth so they can continue to grow in the company.
So in order to benefit everybody in here, you created a very unique model to approach
Yes.
your structure both now and in the future. Can you give us a high level approach to what that model looks like and how everyone benefits from it?
Yes. High level approaches, we're testing the water, since one of our teammates, Dante, has more experience with fund management and investment funds as a whole. We are trying to take a different approach at the start, that we are creating a C Corp holding company is the best way to put it. And the holding company will obviously, what it does is hold a range of portfolios of franchises. And so what we're doing is right now we're creating that C Corp and raising the initial investments we need to buy the next franchise. And what our goal is after that is that C Corp will no longer be raising any more money, will not be selling any more shares, would be the end goal. And that afterwards, the initial acquisition has been done, is that we will use that cash flow from the first acquisition to either to continue to grow that one and buy out more territories, and then use some of that cash flow also to simply start an investment fund underneath the C corporation. And what that looks like really is that the initial investors will have a holding stake in a company that is buying up franchises and is holding investment funds or syndications. And so we're kind of it's the best way I think some people can visualize is like if you were to buy a share into BlackRock at the start, you're investing into BlackRock that starts investment funds or private equity funds. And that's been the simplest way I've been able to find to explain it. And the reason we do that is to align ourselves with our initial investors, because those first investors that invest into the C Corp means they invested in us, they trusted us, meaning that we don't want to have to sell more shares if we don't have to. If we can avoid diluting their shares and their ownership, we want to do that as much as possible. And we have several things that we have done to make sure we always align with investors. We've put in something called a put option, where that after a set amount of years, the investors will have the right to be bought out at the fair market value, whatever that is. And we will have no such call option at all. We want to make sure that the investors can stay as long as they want, and that they can leave whenever they want, and that we will be required to pay them back and pay them out at a fair market value, so that our incentive is for them to stay as long as possible and to continue to see this growth. But we've made sure to line up everything where the investors are the first ones to be paid. If we have to liquidate, they are the first ones to be able to get all their money back, and so on and so forth. We've made sure to treat our investors as well as we want to be treated. We want to make sure their money is safe, is that above all else, that if all else fails, that they will get their investments back. And that, like I said, we don't want to dilute shares so that we can continue to grow in the way we see. And that's why talking to Dante, we've decided to kind of go with this unique structure. And so far it's gotten great feedback from other people, but it's still in the early stages. And right now we're still in the early stages of raising the capital for the first initial acquisition.
Where do you see yourself in the near, medium, and then long term with Beta Capital?
In the medium term or short term, it's right now just raising our capital for the new holding company to buy the initial acquisition and to buy out the franchises right now, and then grow from there. Medium term is to really is to have the investment funds going, whether it be buying up some other restaurant franchises or something else. Would be kind of the medium term. It's not very exciting stuff. We are in the business of buying existing franchises, or depending on the franchise, maybe even opening up some new existing locations. But short and medium term look pretty similar, just continuing to grow however we can. Long term, so with what we're calling this new project, we're just calling it Beta Capital Group Franchise Holdings. Something goal is over time, maybe even dive back to invest in things outside of franchises in the very distant future. Probably not for a long time, but I see Beta investing to not just franchises, but maybe into small and local businesses, investing into non-franchise businesses, really, and investing, like I said, into things that might fulfill more of our mission statements, maybe investing in communities, investing into startups. So really, the goal of Beta of the long term is to be able to invest in an array of areas, not just franchises. But right now, we are franchise experts and we are comfortable in this space. And that long-term goal I told you is more of a hope and a dream that we hope to reach someday. But even though we need to plan for the future, we're planning for the short and medium term. And honestly, the franchises is looking like a long term too.
It sounds like you're setting it up very well for that whole process, and you can get exits along the way and all that kind of stuff where investors can continue to benefit, and everybody can continue to win as you grow and then fulfill ultimately you and your team members' missions.
Exactly. And something I should have added earlier is that one thing we are very particular about is that we buy and hold. If we buy something, we want to act like we're going to hold it forever. We might hold it for as long term. And that is honestly one other benefit of the franchises is McDonald's, Dunkin' Donuts, or down in Texas, Whataburger is definitely going to outlive me and all of us. And so these will last the longest. And so that's what the other reason I love is that we can hold it for as long as we want, or as long as we keep signing with the new franchise disclosure, new FTDs. And so, yeah, we're in the business of buying and holding. And like you said, we're just a team of people who have maybe differing missions, but we all have something that fulfills us more in life than just what we do right now.
Well, Jackson, I look forward to following up with you in 1 year to see kind of where you stand, where all this has gone, and just following your journey. It's really neat to see it kind of at least for me, seeing it from the ground up to where it is now, to where you've actually got some real solid traction. You've got your bumps, your bruises, but nonetheless, you are moving forward and making great progress. So we'll look forward to that follow-up here in a year. And in the meantime, wish you all the best.
Thank you for having me on, Matt.
Thank you so much, Jackson.
Thank you.
We hope you have enjoyed this episode of The Alternative Investor. If you found this valuable, please be sure to like, subscribe, and share. This show is brought to you by Honey Hive Capital Partners. Visit us at honeyhivepartners.com to continue your alternative investment journey. This recording represents the views and opinions of its guests and does not reflect the views and opinions of Honey Hive Capital Partners, LLC. Nothing in this recording, nor any communications from it, should be treated as constituting financial, investment, legal, tax, or other advice of any kind. or as a recommendation to buy or sell an interest with respect to any investment. We look forward to you joining us next time.